The Warsaw Stock Exchange is closed for Monday, November 3, 2025. Airway Medix, ticker AWM, last closed at 0.3690 Polish zloty, down 0.27% on the day. Now, the immediate expectation for many investors, particularly in the US, is to try and figure out what this company is. But the reality is, the price itself, which translates to roughly 9 cents in US dollars, isn't even the most shocking part. The critical insight, the one that changes the entire conversation, is that this stock isn't what you think it is. This is not a US-listed company. You are looking at a micro-cap medical device company based in Warsaw, Poland, and for 99% of retail investors, this stock is an entirely different universe of risk than what they're used to. This isn't just a different company, it's a different world. It's very easy to fall into this trap. An investor is doing their own online investing research, perhaps looking for a new opportunity. They type a ticker AWM into their Robinhood app or their Fidelity mobile app. They see a price that looks impossibly cheap. The expectation is that they've found a hidden opportunity, a stock that's misunderstood and trading for pennies before it becomes the next big thing. This is the narrative that fuels the speculative end of self-investing. But the reality check is brutal. The Robinhood stock trading platform, the SoFi Invest app, your standard Fidelity brokerage account, none of them are likely to even offer access to this. This stock doesn't trade on the NASDAQ or the NYSE. It trades on the GPW, the Warsaw Stock Exchange. The only way for a US investor to even attempt to buy this would be through a specialized individual brokerage account with a firm like Interactive Brokers, which is built for global market access. But even then, the Interactive Brokers platform would likely flash warnings about liquidity and risk. So let's look at the recent trading action through that lens. The stock is hovering near its last close of 0.369 PLN. The 52-week range is stark, from a low of 0.200 PLN to a high of 0.5480 PLN. This tells you everything. This is not a stable investment. This is a highly volatile trading instrument. The stock is up significantly over the past year, over 57%, and by some measures closer to 190%. But that's only because it was coming off an all-time low in July 2024. This isn't a stock showing strength like Nvidia stock plowing to new highs on massive earnings. This is a stock that fell to a fraction of a penny and has now doubled, meaning it is now worth 2 fractions of a penny. The trading volume is also a massive red flag. On its last day, it traded around 167,000 shares. That might sound like a lot, but at 0.369 PLN, that is a laughably small amount of capital changing hands. Any investor trying to build a meaningful position would find it impossible. You couldn't sell a large position without crashing the price, and you couldn't buy one without sending it soaring. This is the definition of an illiquid market. This is why investment help and services like Schwab Intelligent Portfolios or a SoFi Robo-Advisor exist, to shield people from exactly this kind of instrument. These automated intelligent portfolio services are designed to build diversified positions using things like Fidelity ETFs or Fidelity mutual funds, not to take flyers on Polish microcaps. This is not a stock for your Fidelity IRAs or for Fidelity Wealth Management to build a retirement plan around. The technical analysis for AWM is currently flashing a strong sell signal across most moving averages and indicators. This suggests that the small pop it experienced over the last year is already rolling over, and the path of least resistance is back down toward those lows. There are no major analyst ratings to speak of. No Wall Street firm is covering this. There are no price targets. You are, as an investor, completely on your own, trying to decipher financials from a foreign market. And those financials are where the expectation versus reality gap becomes a chasm. The expectation is that a company, even a small one, has a business. It sells things, it makes things, it has revenue. The reality for Airway Medix is confusing and terrifying. As of its recent filings, the company has a market cap of just 37 million PLN, which is about $9 million US dollars. It's a nano cap. But the income statement is what breaks your brain. In 2024, the company reported annual revenue of just 12,000 PLN. That is not a typo. 12 for the entire year. Yet it posted a loss of over 11.7 million PLN. This is not a business. This is a research project that is burning cash. More recent trailing 12-month data is even more bizarre, showing revenue of just 2,000 PLN, but a net income of 1.84 million PLN. This jump, a reported 770% change in net income, is almost certainly not from operations. It's likely a one-time accounting gain, a grant, or some other non-recurring financial event. It is absolutely not profit from selling products. So what is the product they are failing to sell? This isn't an airline, despite the name. Airway Medix is a medical device company. It was founded in 2010 and is based in Warsaw. It engages in the research, development, and, in theory, commercialization of single-use medical devices for patients in intensive care units and anesthesiology departments. Its entire focus is on preventing ventilator-associated pneumonia, a very serious and very real problem. They are developing things like a closed suction system, specialized endotracheal tubes, and oral care solutions for intubated patients. This is a noble, important, and difficult field of research. The problem is that as an investment, it appears to be a total black hole. The company, as of the last employee count, had 1 employee. This isn't a company in the way you think of Apple stock or Tesla stock. This is, for all intents and purposes, a publicly listed R&D shell that is trying to get a product approved and to market. This brings us to the future outlook, and the scenarios are binary. The expectation of the penny stock investor is that one of these products gets FDA or European approval and the stock goes from 0.36 PLN to 36.00 PLN. This is the lottery ticket. The reality is that the company is burning cash with virtually zero revenue. The 11.7 million loss in 2024 versus 12,000 in revenue is an extinction-level cash burn rate. The company's survival depends entirely on its ability to raise more capital, which, for a stock this small, likely means highly dilutive secondary offerings that will crash the price, or taking on debt it can't afford. The risks are not just high, they are total. The risk is a 100% loss of capital. The SoFi trading platform and the Fidelity trading platform are built to handle SoFi stocks and Fidelity investments, but this is in a different category. Interactive broker stock trading might be the only way in, but the interactive broker's fees for international trading and currency conversion would just add to the potential losses. For any online investment portfolio, this is not a core holding. It's not even a satellite holding. It is pure, unadulterated speculation. The only possible bull case rests on a miracle, a sudden, unexpected commercialization success, a partnership with a major medical device company, or an outright buyout. But a buyout of what? A company with 1 employee and no revenue? The acquirer would just be buying the patents, assuming they are valuable and viable. Comment below if you've ever purchased a foreign microcap stock and what your experience was. Was it a win, or did you get burned by the liquidity? In summary, the story of Airway AWM is a powerful lesson in self-investing. The expectation, driven by a cheap-looking price on investing sites, is that you found a secret. The reality is that you found a Polish medical R&D project with no revenue, an enormous cash burn, and a strong sell technical rating, all trading on a foreign exchange that is inaccessible to most investors. The disconnect between the hope of finding a hidden gem and the reality of what this ticker actually represents is one of the most extreme I have ever seen. This isn't a stock to put in your portfolio. It's a case study in what to avoid. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.